Hello, ORAT Nation. Today is Sunday, November 12th, day after Veterans Day. Just want to do a shout out to all the veterans out there. Thank you for your service. We absolutely do appreciate it. It's a great country we live in, and we wouldn't have the freedom we have without you. So thanks for all the veterans out there. Zuber's gone today. Obviously, he's not on with me, so I'm flying solo. He will be back, I think, in 2 weeks. So I'm probably just going to do one video today. So I'll go through things pretty quickly. Let me go ahead and share my screen and we can jump into it. For those that would like to get my newsletter, which is free, that I send out every weekend on Saturday, usually by about 1 o'clock Eastern time, just go to breakpointtrading.net and click on the link. I'm going to spend some time on the site here today. So click on the link in the upper right-hand corner and you can get the newsletter. You don't need to register, but if you want to be reminded each week, you might want to register your email at least. So this is what it looks like when it comes into your inbox. Make sure you check your spam folder because sometimes these will go to spam. So that's what it will look like. Let me go to the website. Here's the front main page. As you'll see right up here in the upper right, this is IBD, their current status. And they just changed it again on Friday. So it was market and confirmed uptrend, but they were saying 20 to 40% exposure. Now it's 60 to 80% exposure. So significant change since the last time. And by the way, here's where you get the newsletter right here. Click on this box and you can get the newsletter. If you want to check earnings that are coming up, you can click on this box right here. It actually takes you to stock charts, their earnings calendar. So this is for next week, upcoming earnings. And you can just scroll through there and see if there's any names that you recognize that you might want to follow. First thing I want to do is take a look at what the S&P did, because I've been waiting for the rally or the pullback from the rally to complete, which it did last week. So you can see here's the big rally right here. We had a sideways movement. We had a down day on Thursday, but then on Friday, it actually took off. And most importantly, it closed above this resistance line right here, which was the previous high from back in early October. And it closed above the downtrend line. So both of those are significant occurrences. That means that we are now clear to move higher. We've got another resistance up here at about 4,500. And then 4,600 is major resistance. So we'll see what happens when we get there. 48.18 is the all-time high. So that's what we're shooting for. I said that we needed to get above 4,400 and we ended at 44.15 on Friday. So that's all good news. Using consolidation theory, usually when you have a strong trend, either up or down, it will typically continue, it will consolidate, and then it will continue in the same direction as the trend if it breaks out of the consolidation in that direction. So you can see here we had this uptrend right here from about 4,100 up to about 4,350 roughly, and we broke out. So according to consolidation theory, we should cover the same distance on the upside. The way to figure that out, this is roughly 4120, and this consolidation here is roughly 4370. So that's about 250 points. You add that to the 4370, and you get 4620 roughly, basically right where this line is, a little bit above that line. But this will be major resistance up here. So I expect if we do get to that level, it's going to consolidate again, maybe pull back before it moves higher. But the end of year rally may have begun. Now we'll see how long this lasts because some of the momentum indicators are a bit overbought. Not completely overbought yet, but we have to realize that this uptrend may hit some resistance right here and then pull back again. We'll see if that happens. The other important point, I put on here the head and shoulders, which I had talked about previously, and we thought that maybe that had been negated by this little uptrend right here. But if you look at the head and shoulders, the way that this is calculated for the target is you take the distance from the head to the neckline, which is where this support line is right here. That's about 5.5%. And then you extend that 5.5% lower to get the target of this head and shoulders. And this was right down here. And if you draw that line horizontally across, it points exactly to the tick at the low of this bar right here, 4103. So this, calculating this right here is 4103, and the low of this day over here was 4103. Exactly the target. So we took off from that level, and I think we're now rallying into the end of the year. We'll see. It's not going to go straight up, obviously. So keep that in mind. Let's go back over here and take a look at, we'll look at the NASDAQ as well. NASDAQ 2 is right up against resistance, but it broke above this previous high right here. It's above its downtrend line. So you can see the two resistance levels here that it has to get through. But it had a really nice day on Friday as well. So we'll see if that will continue. Interestingly, there's a gap down here that one of my subscribers pointed out to me a while ago. Actually, when the price was way up here, she said, you know, there's a gap back here. Do you think that gap will fill? I said, well, it might, because gaps like to fill. So let me go ahead and draw that gap in there. Remember, that's when the price was way up here. We'll draw that gap in there and we'll see if it fills. Well, that came down. I haven't changed this, by the way. This gray line right here, I haven't changed it. It came down again to the tick, right to that gap fill, and then took off. So we're now above all moving averages, above the 200, the 21, the 8, the 50, and we've got, you know, it's not going to go straight up, but it looks like 14.4, somewhere in that neighborhood is what we're headed towards. These are all on the homepage. There's no subscription needed for the homepage, so you can get to all of these different charts here. Here's Bitcoin. I talked about Bitcoin on Wednesday, that it was forming a bearish wedge that often will break to the downside. Well, this one didn't. This one actually broke to the upside. So Bitcoin is, again, this is another consolidation. So Bitcoin might still have a significant run ahead for it now that it's broken out right there. So that's pretty cool. Dollar, here's the US dollar and shows gold. You can see gold rolling over after hitting these highs, resistance over here. So gold is rolling over. The dollar is still hanging in there. 20-year bonds have started to move up. We'll have to watch that, because as the 10-year yield drops, 20-year bonds will move up. There's a whole section in my newsletter this week talking about bonds that came from another site that I watch. Very interesting conversation about bonds. They indicate that part of the reason that the yield has been going up is because Japan and China have been selling our bonds, which has caused the yield to rise. But the biggest holder of bonds is the Fed, much bigger than Japan or China. So we'll see what happens. If this yield continues to fall, then bonds, and next year, especially if the Fed cuts, next year bonds will continue to rise, I think. It's my opinion. Down here, always on the main page, is the secular bull market. And you can see here we are still in a secular bull. And as long as we are, even if we have a recession, it will be short and shallow. So that's what I'm expecting sometime next year. It'll be a short and shallow recession, and then the market will continue to take off and climb to higher highs. We probably have until 2029 to 2031, somewhere in that neighborhood. Can't tell exactly where it's going to end, but I'm watching each of these three. And if any of these three turn red, like they did back here, and this is the secular bear market, which typically lasts 12 years, then I'll give everyone an alert, and you'll be able to see it right here on the main page. If you look at here, look at this. This is updated every weekend, so you'll see where we are on that secular bull market. Okay, let's talk about next. Let's talk about inflation. CPI coming up this week on the 14th, which is Tuesday. We get the CPI number. Let's take a look at this. This is the subscription area of the website. This is the chart section, which is where I spend a lot of my time. I put in here the top 10 lists from VectorVest, from Earnings Beats, and from IBD. Every week this gets updated and show you the ones that dropped off. I also show in each of the sectors, what are the top 3 stocks in each sector, and then cross-reference these to the top 10. So anything in red over here is also in the top 10 over here. Just interesting. You can see if you look at any of these charts, these all look really good. So almost any of these charts that you want to click on, they all look really good. So these are the leaders in their respective sectors right now. There's Duolingo. So all of these charts look great right now. Let me take a look at the CPI. It's right over here somewhere. CPI headline with core. So here's what we have to look forward to on Tuesday. This is the 12-month rolling window. The way CPI works is when a new one gets reported, the one from 12 months ago drops off. And if there's a wide gap between those previous two, then that will help CPI on this side actually decline, believe it or not. So there is a wide gap this time that's going to drop off. There's something else going on that I'll show you in a second that I think is going to drop. Last time CPI was at 3.7. I think because of this base effect, this is called the base effect, the 12-month window. Because of the base effect and because of commodities dropping significantly, I think we're going to get a lower CPI number. I don't know how much lower, but I think it will be lower. And I think that might be a catalyst for the market as well on Tuesday. So watch that Tuesday. That's going to be the big one next week. Core CPI actually was down last month. Headline CPI was even. Core CPI was down. And then PCE was down significantly last month. So these are the ones we'll be watching. But CPI in particular, I think is going to drop. And the other reason I think that is if I look at the Fed rate hikes right here. So these are all the rate hikes. This is the beginning of the rate hike schedule. You can see where the market was dropping until I hit the bottom in October. The Fed kept raising 475 basis point raises right there. And then after we hit this one, the Fed continued to keep raising, but the market kept rising. Well, right now we've got 2 zeros, a quarter point, and a 0. So depending on how you want to start this, we now have, let's say, 2 months of pauses in the rate schedule. I think the Fed is done, frankly. But the most important thing to notice here are the commodities down here. So CRB is made up of agriculture, energy, industrials, and precious metals. Those are dropping significantly. What's in the shaded area is what CPI will be reported on next week. So CRB dropped a little bit, but look at oil. Oil dropped considerably. Look at gasoline. Gasoline dropped considerably. Copper was pretty much even. But because of these drops in commodities, I think that's another reason why CPI and inflation will look like it's starting to head down, which is what the Fed wants to see, frankly. So that's what we want to watch for next week. The other things to take a look at is the 10-year Treasury yield. It's been dropping. We had a little bump up Thursday and Friday, but in general, it's hitting right on its 50-day moving average. So I expect this to kind of move sideways. Again, if we use consolidation theory, we've got 5 up here and 4.5, 4.6, let's call it. So that's about 4 percentage points. So down to 4.2 would be the target right down here, somewhere in this range, 4.2 to 4.3. So we'll see if it gets there. The 2-year yield is right here. The yield inversion, interestingly, was heading towards 0. And that's one of the things we watch, or I watch, to start the clock ticking for a recession. Because in the past, whenever it goes above 0, then it's about 4 to 6 months before a recession happens. Every single time, by the way. It's not when the yield inverts, which is what everyone likes to talk about. It's after it goes back above 0. It's when the recession occurs. It was heading there. It's very close. But now it's reversed again. So maybe that's put the recession off. You'll also notice down here, growth versus value, growth is taking off again. I've been pointing this out for quite a while now, and I'll show you an even better one. But Wall Street is still buying into growth, so they're not buying that we're going to have a big decline. They actually think that there'll be a rally coming up. The inverted yield curve right here actually shows you what I'm talking about. So these are the last two recessions, 6 months and 5 months after it went above zero is when the recession happened. We were heading towards zero right here. This is a weekly chart, by the way. Heading towards zero here, but now we've had 2 weeks in a row of declines, significant declines. So we'll see. I mean, that might put the recession off if that stays below zero. So it's just something to watch. All these charts are out here on the website. Let's take a look at the sectors on Friday. Very interesting. I pointed this out in the newsletter as well. The S&P is right here, so anything above the S&P is outperforming. And you can see the 3 sectors outperforming are all 3 of the aggressive sectors. Technology, consumer discretionary, which is where Tesla is, communication services, which is where Google and Meta are, and the NASDAQ 100 as well for an index. All of these outperforming the S&P on Friday. So Friday was not only a great day with the market breaking out of that resistance level that we've been waiting for, 4,400, but what's doing it are the aggressive growth sectors is what's pushing it higher. If we look at that over a 1-week period, we can see again everything above the S&P. We've still got technology, communications, and the NASDAQ. Consumer discretionary was lagging for the week, but Friday pushed that up significantly. So that might move back up into the leadership position as well. So that's all good news. I talked about the growth versus value. So this is a better look at it. Here's growth versus value. You can see as the market was dropping right here, the S&P was going down, the Russell 2000 was going down. Growth and value was moving sideways. And in fact, as it was even declining even more recently, a couple of weeks ago, growth was actually outperforming value even more. So Wall Street was rotating out of value and into growth, even as the market was declining. They were getting ready for the rally. So I think the rally is in full swing right now. Here's large cap growth versus value. It's significantly higher. Mid cap growth versus value is just about to break out of its previous high. And small cap is the one that has been lagging. So it's also moving up, but it's still got a ways to go before it breaks above its high right there. So that's all very positive. And I think just this whole year, you can see how growth is outperforming value for the whole year, starting back in January. So this has been signaling to us that the market is going higher by the end of the year, which is what I've been saying for quite a while. What else can we look at here? Let's look at the McClellan oscillators. This tells us advancers and decliners. So anytime it's above zero, there are more advancers than there are decliners. You see a pullback a little bit last week. We had that sideways movement in the market. So that's to be expected that there would be fewer advancers in a pullback, but it's still above zero. So that's still very positive. And you can see down here, the S&P actually broke out of that trend line. It's moving up. The most important thing that I've been pointing out is the divergence right here. As the market was hitting lower lows, this is the S&P, the advanced decline lines were hitting higher lows. Even though they were still below zero, there were fewer and fewer decliners as the market kept going down. So that is a positive divergence. That means the downtrend is running out of steam. And now we're officially in an uptrend since we broke above that previous high. And then the bullish percent index, you can see when it gets below 30 right here, that's usually the bottom. And that actually is what happened. Got a little bit below it right here. Then we had one more bottom, even as we were getting that divergence up here. So we're about a little below halfway. We don't have to start worrying about this until we get back up here to 70. That's where the tops usually occur. So we still got a little ways to go. Something we should watch. High-low chart. I haven't looked at this one lately, but last week it was black. red, and it's still red. It's actually becoming more red. So these are the new highs versus new lows. So there are actually more new lows than last week, even as we are hitting higher highs up here. So that is a negative divergence. That's not a good sign. However, small cap was kind of doing more highs and more lows at the same time. And money managers are repositioning their portfolios. You can see they're moving out of a bearish exposure and moving into a bullish exposure, which is okay in the beginning, but whenever they get to an extreme bullish situation, that's usually where the tops are. It still has a ways to go before that happens, but this is another one that we'll be watching as things move forward. Okay, so last week I talked about the money show that I went to, and an interesting idea that I saw from Turner Capital. I have now put it on the website. So I put all of the information. I actually put a link to Turner Capital. They use this method, and they are a money management company. I am not a money manager. I am not a financial planner, financial advisor. I'm not giving advice on what to buy or what to sell, but these guys do. So they use this method, and they take their clients' money and they invest it this way. And they've been actually doing pretty well. Now, what they do is they look at the VTI, the total market index. And you can see here, this is something I created to show the Dow, the NASDAQ 100, and the S&P 500. You would think that 500 plus 100 is 600, should be 630 stocks. But there's a lot of overlap between these. So it's actually 517 stocks in this triangle. Then the Russell 2000 are the small and mid-cap names. And then the VTI covers everything. So it covers all of these other ones. So this is the total market right here. Now what they do is they use the QLD which is a double ETF, leveraged ETF on the upside, and they use QID, which is a double inverse ETF on the downside. And they switch back and forth depending on which way the trend is moving. And I'll show you how they determine that trend. Now, what I use in my charts are the Elder Impulse system. I'm not going to go into that, but essentially it combines both trend and momentum in a single bar. So you can see both of these things at the same time. This will explain it. There's a link there that explains how it works. We are right now, the uptrend already began, so we're in the middle of it right now, and I'll tell you what I'm going to plan to do on Monday once we look at these. So these are all the charts. This is how you can just take a look at this and decide for yourself which way you think the trend is going. So what I did was I actually added a couple of them. I put the weeklies in here, which is what Turner uses. They use weekly charts. So it's kind of a long-term investment strategy. I use the daily to get a closer view, to maybe get in a little earlier or out a little earlier. And then I put in a long-term daily chart, which I'll show you in a second, which is interesting because there's no price on it. It's just moving averages. So let's start with the total market right here. This is the weekly view. This is actually Turner's setup, except I added the gray one down here. So they use this MACD right here. And then I used a weekly MACD, which moves a little bit quicker. So it's nice to kind of correlate these two together. I added the PPO at the top, which is kind of like a MACD, but it's faster moving. Just something to confirm what these are showing. But essentially what they do is they wait for these two things to turn either green or red. This is a 40-day exponential moving average and a 50-day. The 50-day is the red one. The green one is a 40-day exponential moving average. And they watch the 40 and the 50 to see when they cross. That usually indicates a change of trend. And because this is a weekly, this could take a little bit of time for actually to happen. But in this case, you can see it turn red right back here. But this is because of where the MACD down here is. This was the sell signal or the go to cash. I think of this more as a go to cash signal. You could go to the QID as well, but I'd prefer to just go to cash and see what the market's going to do. And then, so this was in 2022, it was in April. You can see the market actually started to fall earlier than that. And then this is in March of this year when it gave the buy signal to get back in again. So that would be the buy signal to get in. Now, they use the total market just to understand what the trend looks like. I added this long-term daily, which is basically there's no price on this. This is just a 21-day and a 50-day moving average, color-coded. So when it's green, 21 is above the 50. When it's red, then the 21 is below the 50. And you can see if you just bought when it turned green and just stayed in there all the way up till here, there's a little bit of chop right through there. So you would have been out and back in again, probably for about break even. Again, this is the total market index. And then you would have been out here at the beginning of 22, and you would have stayed out as long as all of this is red until the first part of 23, February of 23. That's when the up arrow happened. So these are very long range, long-term trades. You can see right here, this is the COVID crash. You got out right there, got back in. So there's 1, 2, 3 trades in about a year and a half. And then you could either stay in cash until you get to this one or go to the QID and make money on the downside as well. But if you got back in right here, you'd have 1, 2, 3, 4 trades here. And it's starting to head back up. It's looking like it's going to get a green arrow here pretty soon as well. So we're going to watch that. Now, this is the total market. The next thing to do is to take a look at the triple Qs. So you can look at the Qs and see what they look like. This, again, this is Turner's view, the green and the red, the 40 and the 50. We are still bullish, by the way. So if you had got in back here, you would still be in, even through this pullback. So that's the long-term view. On a daily view, it looks like this. So you could have got in back here in March, which is pretty much what the long-term view said, and then moved to cash. The blue lines here are moved to cash right here in August. And then back in, this is what I mean by we've missed it a little bit, even though we broke out of this resistance right here. So on Monday, depending on what the market is doing on Monday, will probably buy a opening position, not the full position, but an opening position in QLD, and watch these then to see how they are performing, to see when I move to cash again or move out. Again, on the QLD, it shows you a weekly. So there's, on the weekly, there's the, when it turns from red to green, you would be in, and you still would not be out, by the way. It hasn't turned to red on the QLD. If you look at a long-term daily, this is the one that doesn't have any price on it. So this one would have got you in here in January and out. Now this one, the VTI got you out a little later than this particular chart, the QLD. Same thing up here. VTI was a little bit behind the QLD. So there's a little bit of art to this. It's not just mechanical. I like to look at all of these things and make a decision based on what they're all doing. So right now, you would be out of the QLD, but it looks like it's just getting ready to turn higher. And if we get an up week next week, then that probably will go higher. And then on the daily chart, here's what it looks like. So there's the buy signal right there last week. And then here's the breakout right here above the previous high. So as long as the market looks good on Monday, I probably will get into a position, a small position, an opening position in QLD, and wait and see what the market does. We're getting near the top, so it might move up to this level up here around 68 to 70, but there's going to be resistance up there, and it's going to pull back when it gets there. So I'll have to see what I'm going to do. That's why I'm not going to take a full position yet. I'd actually like to see it pull back and create a higher low. So we have a higher high right now. The next thing is I'd like to see a higher low, another pull back and a low that's higher than this one. That would confirm an uptrend into the end of the year. But that's my plan. That's how I'm using this. It's a very interesting way to take a look at things. So you can read through that. If you have any questions, send me a note or join the website and you can get access to it. I'm going to put at the bottom down here, I will put the a portfolio just like I've done over here with the dividend scan that I ran at the beginning of the year. And I have not touched these. I just let them run. I will do the same thing down here once I do an entry, which might be Monday. I will start a portfolio just like this and actually have a summary report on how it's doing right down there at the bottom, so you can track along with it. So that's pretty much it for today. Hope everyone is doing well. Happy Veterans Day. Thanks to all the veterans out there. Zuber, I think, will be back in a couple of weeks. Sorry, I've only got one video this week, but hopefully that was enough information for you guys. Again, breakpointtrading.net if you'd like to get the free newsletter. And there's lots of nice stuff right on the front page that you can get access to without a subscription. But there's a ton of content in here. You know, I've got all the webinars we've done in the past, market bias matrix. By the way, this is really interesting. I'm tracking the indexes, the sectors, industry groups, intermarket relationships, commodities, metals, and currencies. Each one of these. And as they turn short-term, medium-term, and long-term, I will put the bias of each of these in here. A lot of these last week turned short-term. They moved from red to green just in the last week. A lot of these, I've noticed, are right on the verge of moving to medium-term green as well. So if we get a good week next week, and I update this every day, so you can see what the trend looks like. You know, we want to see, instead of a bunch of reds and yellows down here, we want to start to see greens and yellows. So there's the overall trend. You can see the short term, how fast that's moved up. Then we had the pullback last week. But look at the medium term, how it's starting to move up now as well. So I'm expecting the medium term to catch up with the short term, and then the long term will catch up after that. So watch this next week and see what happens. There are links to each one of these. So if I want to see how, for instance, let's take a look at the NASDAQ 100. I can click on that and I can see here the short term is when the 5-day moves above the 21-day. The medium term is when the 21 moves above the 50. You can see right there, one more day and that will be medium term green. That's all it needs. And a lot of these look like this. One more day up like this, and there'll be a lot of those that will turn to a medium term up or bullish signal. So that's good news for the market as well. The SPX actually shows you the signals, so you can see what they look like. You know, this one has a couple more days before it's going to cross medium term bullish. But if we continue to get upward movement, you know, that just could be 2 or 3 more days, and that's going to get a medium term bull as well. So very interesting of how all these things look. Gold down here, you know, it's been bearish. Actually, long term, medium term is bullish. But if I click on gold, I can see right here, short term bearish. The medium term is starting to roll over. If that blue line crosses below the red line, it will get a medium term bear as well. So gold has been moving down significantly lately. So something to watch for. What are the other interesting ones in here? Bitcoin. Bitcoin is bulls across the board, short term, medium term, and long term. Here's the yield inversion. So the yield inversion, the 10 and the 2, has a short term bear. So you can see it's actually pulled back. I showed you that before. So the yield is pulling back right now, but it's still a ways from a medium term bear. But for a recession, we want all of these to get back up above 0. And right now they're going the other direction. So anyway, that's a lot of interesting stuff. I update this every day at the end of the day after the close, and all of these numbers will change, and I put the graphs and everything out there. Okay, so that's it. Breakpointtrading.net. Thanks for listening, and hope everyone has a great week. Take care.